Hey everyone, it's Scott Neal from Scott Neal Real Estate, and today I've got John Hardimon, one of our preferred mortgage lenders, on the line with me today. John is with Verity Mortgage, and we've been doing business together for the better part of 10 years now. John has helped a lot of our clients get into homes, helped a lot of our clients refinance their existing mortgages, helped myself, my family, my friends, and he's a great friend and he's a great loan officer. John, how long have you been in the business now as a loan officer?
Hey, this is 22 years going on here. This is actually the 23rd year, I guess.
Okay, so you've seen weird things happen in the market a few times, huh?
Yeah, we've been through some SNL stuff. We've been through some 9/11 stuff. Yeah, we've been through TRID. Yeah, we've been through lots of stuff.
Yeah, so the last big change in the market that you experienced was 2008, right?
Yeah, a bit major change. The change
Uh-huh.
about how lending guidelines went, and a lot of stuff went away, and a lot of regulations came to be. But yes, sir.
So obviously, for all the viewers, this is a very interesting time. This is a special report that we're doing. A lot of our videos and commentary are revolved around the coronavirus pandemic crisis, whatever you want to call it right now. So how similar is what's happening right now to what happened in 2008? So if a lot of people have a memory of what happened about 12 years ago, how
Yeah.
similar is what's going on right now in the real estate mortgage market to what happened in 2008?
Yeah, I think there's some similarities. There's some tremendous differences. So similarities are some program changes that are happening at breakneck speed. Like you've got a program on Monday, and then Wednesday it's gone. So you're telling somebody on Monday, yeah, we can do this. And Wednesday you call and say, remember what I told you Monday? uh, I think that's slowing down, but that's the same kind of thing that happened in 2008. I think you also had a little bit of a retraction in the marketplace of people's affordability. One of the things we've got on our side, though, that's very, very different is the lower rates. These lower rates are lower than we've ever seen them after a crisis like this. And so I think that bodes well for a fast recovery, because lower rates mean more affordability, qualifying for more loan, more house, more opportunities with that. So I think that's the main thing that's there. The other piece that's a little bit different, I think, is no one's been through a pandemic. So let's just be honest about that. That's a new thing. And so I think it's what's interesting about it to me is where these other things were events that happened in a moment of time. They were scheduled, they happened, whether it was 9/11 or the 2008 stuff, that we knew the date those things were happening. This one kind of came on us, and it's come. And when did it start? I don't know. When's it going to end? I don't know. It's kind of happening and moving forward, and people seem really willing to get back in the game pretty quick. So there's a surge. I think we're going to have a really good summer. I think summer is going to be a very, very active time in both our markets, both lending and real estate.
Well, certainly for a sales perspective, we're hoping that, right? We're hoping that people kind of get back
Yeah.
to normal and confidence comes back into the market. One thing that you mentioned was that programs are changing a lot.
Yeah.
And this can really be frustrating to the consumer because, your average Joe out there who's just going about his life and knows he wants to buy a home and, hey, just get me applied for a mortgage, make sure that the money is there, let me start making the payment and move on with my life. Some of them are
Right.
getting very frustrating because, like you said, one day a program might be available for them and the next day it might not be. So can
Yeah.
you explain, maybe give us a list of some of those programs that were available previously and now have either totally gone away or have changed dramatically?
Yeah, most of the programs that have changed the most or went away the most were kind of the fringe products. And here's what I mean by that. Someone that needed to do a bank statement program. In other words, they couldn't show their income on a tax return or from a W-2 or a paycheck, something like that. They were self-employed, and because they were writing a lot of things off or whatnot, their tax returns weren't going to be supportive enough to buy a home. And so we would take them on a bank statement program where we would show their business bank statements or personal bank statements. Those type of niche products where they had some challenges proving things, and you had some extraneous like private lenders that would step up to fill those gaps. Well, those guys ran out of money quick. They were gone real fast, and they dropped hard. They're not back, and they probably won't be back for another maybe year, 6 months, a year, probably at a minimum. So they're kind of fringy, nichey things. They're not the rank and file programs that changed. What happened to some of the more basic programs was that because liquidity dried up, and basically what that means is people investing their money didn't want to buy those kind of loans, didn't want to invest in those kind of loans, and because they wouldn't invest in them, there wasn't money to lend other people to get that loan, if that makes sense. So when that happened, what you saw is like some rate increase, credit score guidelines increase. So where before you might do a loan for an FHA at 580 scores, now they pushed up to where they're like 640 is a minimum, or 620 is a minimum, and the rates have gotten worse for those. They're harder to get. And so what that means is you have to have a closer relationship with your lender, candidly. It's one of those situations where if you're firing across 5 or 6 different people trying to find out what's going on and no one really has your whole full story, you're not going to get the best information. You're going to want to have like you'd have a doctor. You wouldn't send, 3 emails to doctors saying, hey, who's going to be the cheapest, one to fix my cold? But he says, well, man, I haven't even examined you. I don't even know what's going on. How can I make an estimate?
Or if you actually do have something as severe as cancer, you don't want to be just running around to each different doctor until you find the one that says that you don't, right?
Yeah, that's got a nice analogy, and that's the reason why the partnership with the Scott Neal team is great, because you guys have great professionals you use both in title and survey and all the stuff that you guys, inspectors and so forth, and lenders, that make sure that you've got a good response there. So what we're doing is some of those folks, if they were in those lower score brackets, that we're working with them now to get them up, because it may only take 3 months to get somebody from a 600 back to a 640 or whatnot. And so it's actually probably better for them long run, because it lets them get in a better long-term situation with their whole credit analysis. So probably not a bad thing with some of those areas, but some of the down payment assistance programs have dried up a little bit. Some of the money there's still some available, but those are, the zero down type things. Those, for obvious reasons, they pull back from those because the responsibility. The only other thing that's really changed, I guess, is some of the now there's been some, I'm giving you our response. There are some lenders who've made some dramatic changes, but that's not a market thing. I think you've heard or read about Chase. Chase came out just, I think it was last week, and said, hey, we're done. Basically, if you're not 700 and are already an existing client and have 20% down and 20% equity, then we're not going to talk to you about mortgages. We don't care. So there's individual decisions being made like that too.
Right. And with Chase coming out and saying something like that, they're such a big household name. A lot of the general public may think that what Chase says applies to everybody, right? So if Chase comes out and says you've got to have a minimum of 700 FICO score and be putting 20% down, some people might think, well, I guess that's it for me. I don't have those qualifications, so I guess I'm not buying a house.
That's a great, the analogy I would give you is it would be as if, a big name store, Macy's, I don't know, pick a big name department store, decides to stop carrying cowboy boots. Well, cowboy boots is, 1% of their overall market. Can you still go to Boot City or Cavender's and get, hundreds of different cowboy boots? They still
Shout out to Cavender's.
Shout out to Cavender's and Macy's a little bit. But here's the point with that, right? Is that Chase is a household name not because of mortgages. They're a household name because of all the other things they do in checking and savings and commercial banking and lending and all that because that they do. Mortgages is almost a minuscule portion of what they do revenue-wise. This is all we do. So we're a lender that's more like Cavender's, right? We got tons of boots. So the fact that they want to stop selling them or only sell one particular brand of boot is fine. We still have all those. So you're gonna see, I think, a move more to specialty, or let me say it this way: those who focus on mortgage professionals. That's their business. That's their core business model of what they do, not an ancillary add-on because they do some other financial products. So I think you'll see the true lenders, if you will, or focused lenders are still going to have your best options as opposed to the big boxes.
Yeah, and the what you were saying basically is what's unique about a company like you, Verity, versus your Chases and Bank of Americas of the world is all you do is focus on getting the mortgage done. Right.
Yeah, that's exactly
you guys
right.
aren't there trying to sign somebody up for a checking account or get them signed up for a line of credit to start a business. All you do is focus on home loans, right?
We are keenly interested, incented, and driven by serving clients in the mortgage needs, because that's the only way we can move ourselves forward and take care of our families as well. So you'll just find a better effort, digging in a little deeper to go a little further. If it takes a while to work with the client to get them into the right loan program, so be it. Even if they don't fit today, that's fine. We can do what we can to work it out over the next few months and maybe get them where they want to go. So yeah, and it's fun to do that. To be candid, it's kind of fun to help people move from where they are. And so anybody that thinks there's that old adage that I think came from I forgot who said it. That's terrible, but of Henry Ford. It was Henry Ford. He said there's two kinds of people: those who believe they can, and those who believe they can't. And they're honestly both right. So the reason is it doesn't matter whether you're in shape right now. If you believe you can and you want to have that desire, we can dig in and work over time to help get you there, so you're in the best position for you and your family long run.
And I know that you guys make it a practice to not just say no, but maybe not yet, or yes when. And so the bottom line is, right now, we know a lot of these fringe programs, as you would say, so down payment assistance, non-QM, which means non-qualified mortgage. These are your people who don't fit into the nice, tidy little mortgage box that everybody is familiar with. A lot of those have either gone away or are on real shaky ground right now. So the bottom line of the reason why those are gone is because of, as you said, liquidity in the market, which basically means that the people who were providing the funds for those loans, they don't really like them right now. They don't really think that they're a great risk because of all of the economic factors. So they've really pulled back on what they are willing to do right now. Is that right?
That's exactly right. And just bear in mind, those fringe products make up for 5%. 7% of the market. I mean, we're not talking, we didn't lose 40% of our programs or anything like that. So it's not that kind of dramatic thing. I think it's everything right now is a little sensationalized a little bit by our media. We're kind of a hyper sensitive and hyper reactive to some of the news out there. Whether that's good or bad, I don't know, but it's still true. And so I think people make it sound like it's a lot worse than maybe it really is. The reality is I've lost some ability, but I've lost, this kind of ability, not that kind of ability.
Well, the world ending is good for business if you're in media, right?
Well, more clicks, more eyeballs for sure. But just being practical about some things, we just have to be a little bit more proactive, and it makes more sense to then get checked out early. If you're thinking about buying a house in 6 months from now, a lot of people would wait until maybe 6 weeks before that time and start checking it out. Now it makes more sense to look 6 months or earlier, I think, because you can put some ducks in a row so you're in that perfect position when it comes time. So, and it's free. It doesn't cost you anything to do that anyway. So it just makes more sense to check it out early.
Absolutely. I totally agree with that. And, one thing I've said for a long time is real estate is simple. It's a house, you live in it. But the inner workings of the industry can be very complicated. So one thing that we always try to do is educate our clients and really break it down and separate fact from fiction. And so I'm glad that you're, explaining to us and really dispelling some of the myths out there. And one of those myths was that the economy and the mortgage market is in such turmoil. There's just no buyers out there. There's no way to get a mortgage. But as you said, those fringe buyers were, or the fringe market was probably only like 5% of the market. And overall, if you had to pinpoint a percentage of people who otherwise would have been in the market right now or otherwise could have qualified that are now out of the market or can't qualify, what would you say the percentage of the total market would be for those people who are just out of the market right now?
Based on the programs I've lost or have changed, that's probably, remember, there's been more change than losing. Based on the changes there and what that's historically meant in my business, it's probably somewhere in the 20%, 1 in 5, 2 in 10 type, that I'm going to have to move them to a different scenario than what we had before. That does not mean they're not buyers. It may mean they're buyers in 3 months or 6 months as opposed to right now. So I want to be clear. It doesn't cut them out totally. Somebody who's looking for a bank statement program is probably cut out now for a while, but just because your credit score is a little bit lower or whatever, that can be adjusted. So Yeah, it's not. I mean, don't get me wrong. That's an effect. There are some buyers that are going to have to be a little bit different, but it's not. Again, it's not some 60% of the market or anything. It's nowhere near that. So we're still.
Okay.
I think you and I were talking. The last three deals that I heard from realtors looking, who were selling properties. One had 13 offers come in, 13 buyers wanting to buy this one property. Last couple had I think 10 and 7. So in three different transactions in the last week, right now, and we're doing this video here at the end of April 24th of 2020, here in the Dallas-Fort Worth area, that's a bunch of buyers out there looking for property. So there's a lot of buyers who are able to buy and are looking to buy right now. They're just not finding inventory. So the challenge might be inventory more than it is program. I don't know.
Yeah, depending on what you're feeding your brain through the news media or whatever. I mean, they could
Yeah.
seriously paint the picture as though everything has shut down, and that's just really not the case. Even if it's 20% that are now out of the market, that's
Yeah.
a significant hit. But hey, the flip side of that is 80% are still out there doing business, right?
That's it. And remember, it's only 20% of one half of the market. So it's really only 10%, right? If you assume 50% buyers, 50% sellers, it's 20% of the buyers, not 20% of the whole market. That's just a good way to, thanks for breaking that down. That makes it more clear. The way I would look at it, guys, Scott, is more like this. If right now, if you get a sniffle, yeah, you may want to do something with that. I don't know, take an aspirin or something. I don't know. If you start coughing, maybe there's something else different you're going to do. And if it goes to full blown where you're having chills and fever, all kinds, you're going to do something there. But the point is, just because there are people who are a little bit sick of their credit doesn't mean you can't fix them. Not everybody's out. And it's only a very small part of the population that's out with the deal. So, anyways, and I think a lot of it. You made a comment earlier about what you're feeding your mind, your hope, your idea. Here's the thing, guys. Is there some people out there getting sick from a disease right now? Yeah. Are there some people having some serious challenges with because yeah? Are there a lot of people with no effects and everything's just fine? The answer is yes. And in fact, it's a lot more true that a lot of people are completely unaffected than are actually affected in the physical realm with this whole thing. The same is true financially. And so what's the bottom line? The question is, get tested. And how do you get tested in this example? Hey, you call a lender, you get with Scott and his team, and they're going to get you somebody good, and you're going to check it out. It's all free anyway. So
absolutely.
It
is so easy to get checked out with you guys.
3 to 4 minutes.
Yes.
3 to 4 minutes.
It's so easy. You guys have this really awesome app that we can share with all of our clients. So if you want to go ahead, check your credit, get yourself pre-approved. Even if you're not thinking about buying a home for maybe 6 to 12 months, it's good to go ahead and get pre-approved now, so that if you can't get pre-approved for some reason, if you happen to fall into one of these, outlying areas, you can start working on it now, so that when the time is right, 6 to 12 months from now, you'll be ready to go. Because I'm imagining, and maybe you can tell me whether this is true or not, John, but it doesn't to me look like these markets are going to just bounce back in the next 30 days. It might take a while for them to kind of come back, of these fringe programs.
Yeah, financial markets are driven by bankers, and any of you guys who know bankers are a little bit more conservative as a group than most folks. So yeah, it'll come back slowly, but they're also money guys, so they want to see the economy going. So there's that push. So you're right. I think it's going to be coming back. But here's what's nice about that: if you're an early adopter, right? If you're one who can see ahead if you can see the recovery before it happens, you can take advantage of some deals and get out there and take some advantages. And that may be listing your house as well. Both sides have advantages right now. I guess I would look at it like there's this other idea too. I don't know if you've heard this, Scott, but people are saying, well, I'm scared to check my credit because don't I lose points? Doesn't it hurt?
Oh yeah, we hear that all the time.
Yeah, I don't know where this urban myth came from, but it is a myth. The credit bureaus have already set it up that you can shop for a mortgage and pull as many mortgage pulls as you want to within 2 weeks, and it doesn't affect you. It's only like one pull the whole thing. So we're aware of that scenario. Now, if you go to the internet and put your social security number in and it gets pulled a bunch of stuff, that's different. I'm not talking about that. But when you come to someone like us, it gets pulled one time. And the best analogy I can think to this is that if you go to the doctor and you're trying to get checked out and he takes your blood, well, the act of him taking your blood is I guess, harmful to you physically in the sense that, right, it's a little prick, in your skin, but it's no big deal. No one dies from that. It doesn't affect anything. You put a Band-Aid on it, you're fine in a day or two. The credit scores maybe change a point or two. I mean, that's so negligible to being able to find out what's really on there and begin to work on it and be able to fix it or enhance it to get better rates or just get into some better programs. So just as a way to calm that down, and we take the brunt of the cost for that. Why would I be wanting to pull credit if it hurt anybody? It doesn't make any sense. There's nobody benefits from that. So I think that's just more of a fear-based thing. And a lot of people, honestly, if we're all cards on the table here, I'm candidly, not being honest, but just being candid, is that most people are scared to look. And let me just tell you that if you're afraid to look, you're the one who needs to look first. It's the same thing if you felt like, hey, I may have a heart issue. Well, man, go to the doctor today, not tomorrow. Serious things like that, we don't wait to check out. Go in and check it out. It's not going to cost you anything, and they can start fixing it. You can be fixed, and you can be improved. Even if you're in great shape, you can be put in even better shape. So,
and luckily, your credit score is fortunately, not as dire as some sort of bodily.
Sorry for the medical analogies right now. I guess that's where we are, right?
Yeah.
Too many doctors on my Facebook feed. I don't know.
So one more thing before I let you go, John, is,
Sure.
a lot of people are always asking, and I know that these fluctuate sometimes daily, weekly, but where are rates right now, and what could people expect to be getting as far as a mortgage interest rate right now?
On my other screen over here, I'm staring at them right now, and they've been pretty flat. And honestly, we've been pretty flat. Now we've had some vacillations like this, but the overall trend has been still very flat and staying low. And so if you're in the, let me do it this way for you. The lowest rates we've been locking over the last few weeks have been down in the twos, 2.5, 2.6, 2.7. The highest rates I've locked, the highest ones, are right now are at like 3.6 on a 30-year fixed.
Wow.
The other ones are on 15. So you're going to be somewhere in those ranges unless it's an egregious type case, which most people aren't. And so the point is, take the worst case, 3.5, whatever, up there at 3. Man, it's a phenomenal rate. I mean, the buying power that people could experience right now, and you can go to any website and search the history of rates for the last 10 years in America, go to Google, Bing, anybody, and you'll see this. What I'm saying is true. They're historically low. They're amazing. And so people are doing cash out refinances just because they can alter other debt, or they can use that money all other ways, take their equity out those ways. And it's just a good time. So if you're looking to sell, it's a good time because you can take that equity and place it in something else, buy a new house for like less down and use that money other ways. It's a great time to sell. It's a great time to buy because you have so much buying power. So this is the reason I think you're going to see a boom that comes after this very soon. As soon as people, the majority of people, I think a lot of people are already somewhat comfortable moving forward with doing some things, wisely and cautiously. But as that becomes more the norm, I think that people are going to wake up and go, holy cow, this market's great for buying and selling, and just because things are good here. And I'm speaking predominantly about Texas, and most specifically about North Texas. We are so blessed to be where we are. Honestly, it's incredible.
Absolutely. Yeah. All right. So if people want to get in touch with you, if they want to go ahead and get pre-qualified for that mortgage or that refi, how can they get in touch with you?
Hey, man, honestly, the best way to do it is touch base with your Scott Neal real estate team member. They have an app that can connect you right to us, and it's about 3 to 4 minutes to get that set up. If you need to contact or want to contact me directly before you touch base with them, you're welcome to do that. And you can get me at 214-695-2175, 214-695-2175. That's my cell phone direct. It's right here all the time. I'm going to return all the phone calls you just made to me. I got you. And shout out to Scott Neal. Make sure that you get some mints from the Scott Neal team. You hold out for these.
Those are good mints.
These are good mints, and don't let them skimp there on there. Don't let them push you off to a coffee mug or something else. Get the mints. I'm just saying. But seriously, Scott, I appreciate it a bunch, and thanks for doing this, man. There's so many agents who aren't educating their folks on the bigger picture of what's going on, and right now it's too critical. You can't just focus on the house. You've got to focus on the whole big picture. That's what I love about you and your team. You guys see the big picture and take good care of your folks.
Absolutely. Well, I really appreciate you joining with me today, John.
As
And
always.
everybody, again, if you want to reach out to us, we'll send you out that app. It's free, it takes 5 minutes, and it's totally easy to use. I highly recommend that this is the way that you get started. And if, of course, if you guys have any questions about what's going on in the market, how that affects you as a buyer or a seller, feel free to reach out to us. You can reach us on the web, scottnealrealestate.com. You can give us a call, 469-998-3322. Message us on Facebook. However, you can get in touch with us so many different ways. So we thank you for joining in. Again, Scott Neal, John Hardimon, we're here to serve you. So thank you and happy selling.
That's it. Stay safe, guys.